The Farm Credit Illinois appraisal team just completed the 2023 benchmark study. Kent, I'll turn it over to you to share with us what the study revealed about land values this year.
All right, well, thank you, Caitlin. Welcome everyone on this very cool, mild summer day here in August, coming from Mahomet, Illinois. Let me show you my screen. So yeah, we just finished the 2023 benchmark update and got some exciting results in here. So just to kind of give you an idea of what we do here at Farm Credit Illinois, we have 20 benchmark farms that are scattered throughout our 60 county territory. We reappraise those farms every July 1st. Those farms would be a representation of different farms throughout the 60 counties, from bottomland tracts in the southern part of the state. We have, Class A farms here in central Illinois. And so in some of the questions that you asked as you signed up, one of the questions was, how do we determine the productivity of these farms? How do we class these farms? We use the University of Illinois Bulletin 811, and basically what it creates a PI index that I think a lot of people are very familiar with. The way we categorize that is from their PI index rating. So 133 PI farm and above is what we're going to call an A farm. From 117 to 132 is going to be a B farm. And then on a C farm it's 100 PI up to 116. You'll notice we also divide those as a 3C North farm or a Central Illinois farm, which is kind of the north part of our territory mostly. And then on the 3C South, basically you can look, we'll show you a map here in a minute. You can basically say south of Interstate 70 is what we're categorizing as the southern farms. So here's an actual map of all of our farms, where they're located throughout the 60 counties. You can see there that the northern parts are a lot of A farms up there, but we also track the Bs, and we've got 3 C North farms, and then most of the farms in the south are going to be C farms. Well, here's the actual results of the study and what we've come up with. Overall, I think one of the things I want to talk to specifically at the beginning of this presentation is that as we talk land values, understand that real estate is extremely location specific. So we're going to talk in general, but you may have areas and certain pockets where it doesn't follow average trends. So just be aware of, as I talk land values, as we talk trends in cash rent, all of those things, even though we're going to talk in general, that doesn't particularly mean in your particular pocket that it couldn't be a different number, much higher, much lower. There's just, again, real estate, especially farmland real estate, is very location specific. So what we've come up with this year, I have a staff of 11 certified appraisers here at the company, and they all individually do these benchmarks. Overall, the results you're looking at here of those individual benchmarks is pretty positive. If you look at the overall average, we're showing that it's up about 8% this year. Last year, if you happen to tune into this webinar last year or see some of our results from 2022, we were up about 28% overall. So, if you look at the 2 years, almost 36% on average. But as you can see from this chart, that doesn't mean that it's 8% in general across the entire territory. You can see the Piatt County. That one was up 55%, I believe, last year. Just kind of stabilized there at 18,000 an acre. Your other A farms there, Coles, Morgan, Green, followed in line with a 8 to 9%. One was the Coles County was only up about 3.5%. And then you can just look down the line. Of the 20 benchmarks, 16 of those or 15 of those benchmarks were up, 4 were unchanged, and then you had one that just dipped just a little bit. So this goes into more specifics by the way we categorize these farms. These are our 4 cropland A farms. You can see from this chart that I got to move this. I'm sorry. Move this over here. Let me do that. There we go. You can see that on average, the A farms we're saying are averaging right around 18,000. You look, you've got a range of 17.5 to 19.4. Kind of the interesting thing, and you'll probably see this in the next 3 or 4 slides. If you go back, we reached a peak in our territory in 2014 of values. And then starting in 15 and more into 16, we retracted a little bit and values started down. Overall, you can see there the red numbers of 2016, 2017, into 2018 and 19. There was one down there you can see in 2020, and you'll see that in the slides upcoming. And then we started back up in 20 and 21 to where we are today. So just kind of a perspective, we reached a peak in 2014, came off of that peak, probably overall 15%, started back up and actually are back to new all-time highs pretty well with 2022 and 2023 results. Here's your cropland B farms. Again, specific there to a 117 PI to a 132 PI. Now, some of these, we call them cropland B farms. They're going to have a mix of A and B soils on these farms, a lot of them. But we try to find farms with as much just solid B dirt as we can, but you're going to have a mix in these farms. Again, you can see 15 results. You can see some red numbers in 2016, 17 and 18. One was down a little bit more in 19. And then you can see that they've continued from 2020 to 2023 going up. If you look at those 4 farms there, average of almost $15,000 an acre. If you look, I'm going to go back a slide. We're going to say on average, the A farms were up about 4%. So see, again, as I stated in the beginning, just because we say overall it's up 8%, it's very location specific. Go back to the B. And then here's your 3 Central Illinois C farms. So you're looking at a PI of 100 to 116. Again, the trend, 14 was our peak. 2015 was pretty stable. Then it had a slight decline in 16, 17, and 18. Even 19 and 20 had a couple of those farms down. And again, the steady increase from 2021 up through into 2023. The C North farms actually were up about 12% overall. And then we've got several south of Interstate 70 cropland C South farms. You can see overall, again, the same results. 15 was pretty stable, 16 through 19 into 20 had some slight declines but you also had some that were up in those times too. So again, location specific. Overall, you've got a wide variety of land values in this class. You can see on this chart from 5,400, 5,500 all the way up to 14,000 an acre there in Effingham County. Got an 11,000 and a couple of 11,000s there in Clay and Fayette. So overall, that's kind of where we are. If you look here, the C South farms, about 8% is what they averaged. But you also had 4 of those farms that really were unchanged in value from 2022 to 2023. You know, some of this is actually, some of these counties are very closely held. And so sometimes you don't get a change year to year because there's just not enough sales in that certain market. So sometimes these changes can come over a couple of year period. You may not have a change for a few years, and then you may have a little bit more significant change a year or two down the road. Here's just a chart showing, based on the average prices, what land's done. This chart runs from 2000 to 2023, and you can see back in 2000, the A farm was worth probably about $3,500, and has continued to climb. But that's over a 24-year period. Here is what this chart is showing. We'll probably discuss a little bit later, but as you look at farmland as an investment, even a lot of people will have asked the question, well, what's the future of farmland values? And to be quite honest, all I can tell you is we know it will probably change. But if you look at these long-term trends, you can see over time that it's been a great investment. We'll show a chart here in a minute that's going to go, we have a few benchmarks that we can track back into the 1970s. And so you'll see a chart that's going to be very similar to this, but show a longer period of time. Again, here's just 3 benchmarks. One's the Morgan County A farm, kind of a Coles County B farm, and then a Fayette County C farm there. And again, this is from 2000 through 2023. You can see, now these are specific farms, so you see a little bit of change up and down, but overall, the value over time has continued to be a good investment. And then this is the chart here that does show from 1974 through 2023, just 3 farms that we have data on, going all the way back to 1974. You can see if you owned that Morgan County farm back in 1974, it was worth about right at $2,000 an acre. You can see the rise in values back then in the late 70s, early 80s, up to almost $4,000 an acre. You can obviously see the crash that happened there in the late 80s, mid to late 80s. And then for a long time, it was really pretty steady until you get into 2007, early 2000s. And then you can see that it's been a pretty good climb in values over the last 15, 20 years. So overall, here's your results. Again, 15 benchmarks were up and 4 unchanged. You had the one that was down slightly, but again, I want to reiterate, if you looked at that benchmark farm over the last 2 years, it went from, I believe, a little over 12,000 an acre in 2021 to 19,000 an acre last year. Just pretty stable overall. So I think overall you're looking at a solid year again for land values. Again, you can see on this slide the 2022 results had 19 of the 20 benchmarks up. I think only 1 was unchanged last year. So if you look at that over a couple 3-year period, really strong market in our 60 county territory. So Caitlin, I would pause right there. Is there any questions that have come in that that I might address?
None in the question box. So just a reminder to go ahead and add them in the question box on your panel to the right if you have them along the way. We do have some that have come in ahead of time, Kent, but if you're good with that, we'll kind of save those for you to for the end. But again, if you have questions along the way, feel free to drop them in the question box and we'll get them answered for you.
Okay, perfect. Thank you. So this slide's kind of interesting. You know, I talked to this throughout those slides, looking at the different land classes and values. Again, we had reached a peak in 2014. We showed that as the peak in land values up to that point. After 2014, 2015 was pretty stable, and then you had some overall decline. But so this slide's just showing you if you owned the land in 2014, what would it have been worth then and then today. And if I look at this, if you had owned all of these benchmark farms, if that was your portfolio, let's say, they would have been worth about $9,480 an acre back in 2024 or 2014, I'm sorry. If you look at it, what they were worth today now in 2023, you're looking at, you know, a little over $12,000 an acre. So that's just from peak to what we're calling the peak again this year, up almost what, $3,000 an acre on average. This one is showing benchmark values again going back to 2000. This one's showing the appreciation in that 24-year period. And you can look, you know, obviously, again, location specific, some up 295% all the way to 546%, I think is the highest. But overall, on average, land values from 2000 to 2023 on our specific benchmark farms up an average of almost 450%. Just a couple of slides looking at your corn price versus land prices, again, classified by A, B, C North, and C South. You know, you can see correlation here over time, but then you can see in the 2016, 2017, that area, there's not quite the correlation that there was. Looks like it's getting back a little bit more as corn prices have gone up, but obviously, you know, corn prices are a little bit down as we come through timing right now. Again, same thing on soybean prices. See quite a bit of correlation there as soybean prices have gone up, stayed correlated pretty well there. Here we've got just kind of what we're showing as cash rents for our, and again, this is specific to these benchmark farms. Had a few questions on cash rents, and you know, we do a study internally. We also look at some of the studies done by the University of Illinois and Farm Doc, and then we look at the Illinois Society Farm Management Rural Appraisal cash rent study that they do. These cash rents are just what we show for our particular benchmark farms. Overall, we have tracked cash rents going up over the last 3 or 4 years. That's consistent with every other study I've seen. Just some kind of typical ranges. Again, there's pockets that this would be too high. There'd be pockets that this is probably a little low. So just overall, just a reference. And then we look at just our net operating income, cap rates. Again, this is based upon a cash rent farm. This is not looking at a landowner that farms the property himself. This is just looking at what the farm would cash rent for versus what it would sell for. And, you know, I can remember if you go back in time, when I first started 30 years ago, the historic cap rate has always been around 4 or 5%. That's what I remember as a young appraiser 30 years ago. But we've had a long period of very low interest rates, and so that cap rate definitely has reflected that over time. So I'm getting to the point in the presentation of being done with the slides, and then we'll start answering some questions if you have them. But overall, what's the overall outlook now going forward? Well, there's obviously a lot of factors that go into what farmland values do. Obviously, one of the biggest that we see here in our 60 counties, it's a supply and demand thing. And overall, I think historically, if you look, that typically 1 to 2% of farmland in our territory would sell in a year. We've noticed, the last year, it seems like the supply, the amount of land for sale is fairly low, and the demand probably is a little bit greater than there is supply. Interest rates, we got lots of questions on interest rates. Obviously, we went through a historic time frame of unprecedented interest rate being very, very low. That has helped, obviously drive the value of farmland over that period of time. The last year and a half now, we've seen interest rates start to increase. And I've got a lot of questions from you all. Has that affected the value of land? And at this point, no, it has not. We are not seeing the rising interest rates diminish any land values, as you can tell from the results of the study. Will they affect land values at some point? A lot of that will depend upon what the Federal Reserve does, how interest rates continue. We were through all of these rate increases, and kind of there was a feel that interest rates would kind of stabilize and maybe even go down. That could or could not happen. There's been a little more talk of, well, inflation's a little bit better, but we still got things to control. Could there be another increase over the next 6 months? All of those factors are up in the air. We don't know. But at this point, what we do know, at this point, it has not affected land values overall with rates being higher. If you look at the typical land owner and purchaser, and again, we'll talk a little bit about what we see in our territory, farmland, a farmer buying property versus investors. But overall, the farmer's working capital is pretty strong. They've had some really good, strong years with yield and with prices. So that's obviously led to some of this uptick in land values also. Commodity prices overall have been pretty good. It's interesting. I did this presentation for our board of directors at the end of July, and have updated some of this information. I know when I looked at crop conditions back in July, they were actually a little less favorable than looking at them from last week. So overall crop conditions appear to be good, but there are pockets that I know were very dry, some that experienced some flooding. So all of that, again, would be specific to your location. And then, as you know, the world unrest continues, all of the things that we face. That being said, what do we look at? Overall, what I feel like is we're going to continue probably not increasing as strongly as we have, but I do look for it to be fairly stable in the near future. But again, all of those factors above could contribute to something changing that more drastically either way. So that's kind of where we are. Again, let's talk about, because I know one of the questions that was brought up was, are we seeing more investors versus farmers? And in general, no, I don't believe we are. I mean, we've seen some investors come in and buy, a few large tracts, but the sales that I see every day, the auction results that we get, it's still a large majority of farmers are buying this property. There may be a pocket here or there that you could say that it might be an investor driven area, but overall, I think we still see a large amount of farmers buying these farms every day. So, well, Caitlin, that's kind of my presentation. Overall, I've tried to answer a few of the questions. So do we have any others?
Yes, absolutely. Thanks, Kent. It's always so exciting to hear what it's done, and especially with all the volatility that we've had recently, it's just it's refreshing to hear that things are stabilizing, and maybe we'll catch a slight break in the astronomical prices for a minute. But one of the questions that came across here is, although you do not place a value on the improvement, are wind or solar improvements influencing any sales positively or negatively?
Well, we've not seen any negative results from that. I mean, the wind turbines in our northern part of our territory have been here quite a while. It's some controversy still over those, but overall, initially, if you go back several years, we didn't see the wind turbine adding a lot of value to the farms. That has changed as those income streams, people are valuing them more. Solar's still too young to figure out at this point. Lots of proposed. There are some under development, obviously. It's not been around long enough to know positively or negatively any results, but that's something my staff looks at and will continue to monitor into the future.
Thank you. I've got another one here for you.
Okay.
Are we seeing differently in value growth rates when looking close to growing metro areas, considering urban sprawl versus truly rural farms?
That's typically what I've seen in my 30 years, and obviously the last 15 with Farm Credit, is that typically is based upon the overall economic health of the area. Probably, we do see some transition. Obviously, those prices are really, really strong. Our territory out in the Metro East area, we track a farm there that's just on the cusp of it. It's still farmland, but its influences are there. But yeah, I mean, as you get closer to the more metropolitan areas, there is some of that. It kind of comes and goes based on the overall economic health of the area. When the economy is strong, there's development going. Yeah, you do see some land being bought for not farmland purposes.
Perfect. I've got just one more here for you. So if, as a reminder, before we wrap up, it'll kind of be last call for questions here. So be sure to put them in the question box if you want to get them answered here before we wrap up with Kent. So the last one I have at the moment, Kent, is, I guess not one specific question, but there were a lot of comments and questions around farmland as an investment, and with things kind of stabilizing here, do you see that slowing down, or do you have thoughts around buying farmland as an investment more so than investing it, say, in the stock market? Or one other thing, I guess, that got brought up was hedging against inflation,
Right.
and using it in that manner.
And and I don't have a crystal ball. I don't know what the future holds. I think the answer to that question is it's an individual assessment of risk. But I went back to this slide here that looks at 1974 through 2023. You know, if you're looking at a long-term investment, there's the track record of what, you know, these farms have done over a very long period of time. So I think that's how I would answer the question. If you looked at this over a long period of time, yes, I believe farmland's a great investment. Short term, there's going to be volatility in it. But if you just look at the track record of 1974 to 2023, it's a pretty solid asset class, in my opinion.
Perfect. Well, thank you. I have not seen anything else. I'll give it just a second to see if any more pop up before we wrap up here.
And again, you know, on the screen is my email. Feel more than welcome to shoot me an email, and I'll try to answer the question. And I believe you can go back and maybe be able to watch this later also, Caitlin.
Yes, absolutely. I'll touch on that in just a second. We did have one more question pop up here. What trends are we seeing with livestock facility sales in our territory? Are you seeing much of that?
Not much activity, no. You know, there were several swine facilities built a few years ago, but no, there's not been much activity, hardly any activity of those actually selling at this point. Very, very few transactions.
Thank you. Another one is, are farmers buying land farther and farther from their home-based farms?
I would say in general, the answer to that would be yes. You know, if you, again, I was a child of the 70s, you didn't see them buying farmland quite as far out. With the advent of the larger equipment, you know, the larger farmsteads, overall, yeah, I think probably that would be a general thing that they are going a little bit further than they used to. No, probably no question.
Very good. All right, well, that is all we have. So I'll pop up one last slide here. Alrighty, as we wrap up today, I want to give a big thank you to Kent for sharing his expertise with us. As he shared, land values are continuing to increase slightly in most areas. And while it's impossible to predict what will happen in the next year, we hope that you've gained some insights to help you make more educated decisions for your farm businesses. A final few items. Today's webinar was recorded and will be available by noon tomorrow, along with a link to Ken's slides. The recording can be found at the same webpage that you registered at, farmcreditil.com/minded. Also, you'll see in the chat, while you're still on here, there is a link to the full study that Kent did, if you want to take that for reading. And then when you close out of the webinar, a brief 4-question survey will pop up. If you could take a few moments to complete that, that helps us improve the webinar experience in the future and make sure that we're covering topics that you want to hear about. And then lastly, I invite you to take a look at the in-person learning programs that we have coming up in the cooler months here, covering a variety of topics from crop insurance, balance sheets, and a wealth of speakers at our Fielding Forward meetings. The full schedule of programs will be available on our website in the coming days. Kent, if you're still on here with me, there is one more question that popped up.
Okay.
What is the realistic downside percentage in land values if we have 4 or 5 tough years in a row with lower commodity prices?
That's a tough one, Caitlin. That one's hard. I mean, obviously, 4 or 5 bad years, you're probably going to see some fall in land values overall. But I just think again, I go back to long term. Usually you have 4 or 5 bad years and then hopefully things recover. And so, when we went through that stretch after 2014, 2015, there were a few years in there where things were a little tough. You went off about 15% before it kind of stabilized, but it's anybody's guess as to what would happen over a 4 or 5 year period like that. But I mean, obviously, again, I go long term, great investment long term.
Absolutely. All right, seeing no more, I just want to thank all of you attending live for spending an hour with us today, and another thanks to Kent for sharing his expertise. And I hope you guys all have a great afternoon and join us again soon.